Okay, there we go. Welcome everybody to Wall Street Reporter's next Super Stock live stream. January 12th, 2022, we are back with ESE Entertainment, our top performing super stock of the last 12 months for a few reasons. This actually, our goal again is to bring everybody these stocks which have that 10x to 50x upside opportunity. Of course, ESE has skyrocketed from the initial introduction of 37 cents. I think it was 37 cents from last December to a high of over $4.50. It's had a pullback in recent months, like many of the growth stocks. But what's really most impressive is the revenues have increased from a run rate of, I think it was under $1 million annualized when Conrad, when you first appeared on our program, to a current run rate, I think based on historical numbers, in the $50 million range, $50 million run rate. So Conrad, congratulations and welcome back.
What better way to start 2022 than be on Wall Street Reporter? So I'm excited to be back, Jack. Let's get it fired up today. I think it's really important to highlight what you just mentioned. A tremendous year. We were all internally very excited of what we were able to accomplish in 2021. You highlighted the potential run rate of 50 plus million based on historical revenues from the acquisition targets. More important than that is the continued organic growth, us continuing to build that massive M&A pipeline. So this is a new base, and we're just going to take this thing to the next level. We're super excited.
Excellent. So, one thing, I got to highlight for anybody that's watching this now or watching the video afterwards is that, one of the things that we always look for in the potential super stocks, right? And obviously, look, the ESE has performed. I mean, it went up from, it was a 15x, 1,500, 1,700%, whatever the number was. It's very rare though that when a CEO goes on, he says, "Hey, here's the goal," and they actually achieve that goal or even get even close. Because now, when you came on our program, I think last January, you said, "Hey, my goal is to," this is the famous statement, like JFK said, "We're going to put a man on the moon before this decade is out." I think he said that, and sure enough, there was a man on the moon, and I think it was 1968 or not, whatever the year was. There was a man on the moon, right? It wasn't on a soundstage like some people are claiming. And when you said you gave a big moonshot statement, you said, "Hey, I think early January, you said we're going to have a $100 million run rate this year," and sure enough, you went from, I think it was less than $1 million run rate when you originally came out.
Yep.
You're exiting you exited 21 with a 50 million plus run rate. Again, based on the numbers of the acquisition, you got a deal that's closing, the Gameaddik, which is, it's a 5,000% increase, 50x, huge. And the crazy thing is, at this point, the stock got a little bit ahead of it. Maybe I shouldn't say it got ahead of itself when it went to 4, because it's forward looking, right? So it's at this point, it's a really undervalued based on these incredible numbers. And I always think whenever a CEO goes on a program and says, "Hey, we're gonna, our revenues are gonna go from $1 million to 100 million," I always discount it by 90%. I'm happy if they just get 10% of the way there, right? Like, you actually outperformed my expectation. Like, I thought, shit, if this guy is doing $1 million, I'll be lucky if he gets to 10 million. But if he does get to 10 million, the stock will still be probably a 10 bagger based on where the market was at the time. But you actually did 5 times that number, so it's an incredible thing. So congratulations, but don't rest on your laurels, because at this point we got to get to 250. 100 million. It's like the last year's news. Nobody cares about. We got to get to 250 million right now.
Yeah, I mean, you saw it in our corporate update, and I want to make this very clear. The group is even more motivated than they were last year. I mean, we've hit the ground running. If you see the news that we've been putting out, signing big contracts right out of the gate, these things have been in the pipeline for months in advance, and we have hit the ground running. And the guys, they're on the same mindset as me. They're still pursuing that 100+ million. That's just the mindset internally that we have, and we're gonna get there.
Okay, so the key takeaway is, you have this massive pipeline of esports acquisitions. The M&A pipeline is, I think you've said, 100 million plus potential acquisitions of revenues, 100 million worth of revenues or more in the pipeline for this year. Of course, it's very important to also emphasize the internal growth that, there's synergies and everything. So there's, we're going to talk about that. But so the format for today, I think, is going to be, we're going to start off with, you're going to do a little presentation, a slideshow, and then we're going to open up for audience questions. I'll come back after you're finished with the slides. We have some great questions from the audience today. We got a lot of great questions. Wow, a lot of great questions here today. So I think we're gonna hopefully you have time to address all the questions. I think we got like 30 plus questions so far.
Wow.
So
Great.
On that note, Conrad, let me get your slides up on the screen. And here we go. Okay. And Conrad, take it away. I'll see you in a couple minutes.
Fantastic. Thanks, Jack. Okay, we're going to jump right into it, guys, with the overall opportunity that's presented itself to us. ESE is the intersection of what's happening not only in gaming, but in the opportunity of the metaverse. So as you can see by the slide, the gaming opportunity alone is a 200+ billion opportunity by the year 2024. The CEO of Epic Games clearly stated that the metaverse opportunity is a multi-trillion-dollar opportunity. This is actually a group that we work with and have worked with in the past. So we really feel that we're positioned perfectly, not only to take advantage of the gaming market booming, but also enter into the metaverse. So quickly, just a quick recap for everyone, and this highlights the growth internally in the company and just discusses the core business lines. So we have technology, infrastructure, and our gaming franchise. As you can see, the partners and sponsors continue to grow, and it's all tier 1 groups like Riot Games, Ubisoft, Epic Games, EA Sports, Corsair, multi-billion-dollar companies partnering with us on multi-year deals. So there's longevity and stability with those contracts. So company highlights, we're continuing to grow and we've positioned ourselves to continue to consolidate with our aggressive M&A strategy. We have a diversified business model, scalable through the technology and gaming franchise that we have internally. The market opportunity, I already spoke about it. It's grown from a couple 100 billion to a $1 trillion+ opportunity. And of course, execution. We've completed and announced acquisitions. We set out a goal, we accomplished it. We were able to accomplish 4 completed acquisitions last year with 1 additional definitive agreement signed. So we're well on our way. The team's growing fast, 100+ people around the world, and we're continuing to expand this year. So just a little bit more detail about the current assets and our goal of becoming a dominant player in esports through a 360 approach, leveraging our assets, our strategic acquisitions, the market, and our technology. So technology, our digital tournament software, our e-commerce platform, our simulation racing, so our 3D track scanning, and our infrastructure, which is a scalable service. Support fan engagement for esports and sports on the OTT basis. Bespoke solutions for our dedicated team of agents, our e-commerce, gaming franchise. So that's where the media rights come into play. When we work with the groups like League of Legends and Riot, our professional esports team Kick, who continues to expand, and our leagues that we've been releasing news about recently. This is what we're really excited about, guys. And the key point to highlight here is completed acquisitions. We didn't talk about it, we got it done. And we put the actual dates there to highlight, how diligent our team has been working. Our M&A team has been working day and night on these opportunities. And most importantly, we've been able to complete the acquisitions with shareholders in mind. And as you can see, we closed Kick. We went after WPG right after that, Digital Motorsports, and then most recently Frenzy. We were also able to close a definitive agreement right before the end of the year in 2021. So this is a very exciting technology group based out of Montreal, Canada. And as you can see on the slide, historical revenues of 24 million and 4.7 million income. So a tremendous addition to the group, and it adds significant revenues to what we've already built in 2021. So as it pertains to financial performance, you guys are probably aware of this, but our last financial release, we showed a tremendous growth of 2,900%, 4.2 plus million on the quarter. Our total assets increased significantly. And the most exciting part about this, guys, you have to remember, this does not include Digital Motorsports or the Frenzy acquisition revenue or the Gameaddik revenue. So please keep that in mind. And you can kind of get a feel for how fast we're growing organically and with the current assets we have. Comparables, it's always important to get some comparables on the screen. We had a big exit by Score for 2.5 million. They're acquired by Penn Gaming. EGLX has done a tremendous job. They went over $1 billion market cap. Now they've settled in around 400 plus million market cap. Keyword Studios 3.5 billion. Take-Two Interactive 21.5 billion. And as you can see, our market cap currently sits at 87 million. That's the opportunity. It's glaring by the comparables here, how much growth and how much potential there is for us amongst this set of comparables. Financial performance, again, this is what I discussed on the previous slide, but just in a different chart. You could see the growth, guys. Q1 2021 to Q3 2021. That's indicative of not only our acquisitions, but our organic growth and how fast we're growing. And once again, remember, this does not include Digital Motorsports or Frenzy revenue. So please keep that in mind when you're looking at the actual overall revenues. And, capital structure overview. I discussed this. It's important to complete acquisitions. It's important to be bullish, but you have to do it with shareholders in mind. First and foremost, I did not sell one share in 2021. That should speak volumes to all shareholders. And if you look at the cap structure, total outstanding shares, 61.7 million approximately. Insider holdings, approximately around 40%. We've done a tremendous job of keeping the structure very tight. All the key people internally are long-term holders, including myself. And it speaks volumes because look at the chart. It's very stable, and we've done a tremendous job in a tough market. And when you have a structure that's this tight, it's absolutely primed for growth. This is where you get growth. So as I discussed, organic growth and integration, we always talk about our amazing M&A team and what they've accomplished, but let's not take away from the organic growth and integration. So when we start unlocking some of these synergies between all the assets, that's when the magic happens. These groups start working together, revenues start increasing, and we could start working on profit and profit margins. And just integrating these systems and processes, it's going to streamline and accelerate the overall business that much faster. We could then go out and pursue even larger contracts, long-term contracts, once again, driving growth, driving scale. Recent operational milestones, as I mentioned to Jack, we hit the ground running. We finished the year literally to the very, very end, into the Christmas holiday season, closing big deals with groups like EA Sports. We did a deal with Riot Games. We closed a deal with NASCAR with our digital motorsports group. As you can see, there's a theme here. All tier 1 groups, all tier 1 global players. Yesterday we announced the League of Legends with Riot Games. So what's important about this news release for you guys to understand is not only did we re-sign with Riot Games, we expanded, we added additional teams, and we rolled out the whole tournament into the international gaming community. And what happens is when groups like Riot and all the publishers have faith in what you do and are strategic partners, they start providing you with new opportunities and expansion and growth. So this is what everyone wants to know, the 2022 outlook. We did a corporate update. We discussed the outlook for 2022. To say I'm excited is a massive understatement. The entire team's literally can't wait to get started. And we've hit the ground running. The first thing on the deck is closing the acquisition of Gameaddik is a top priority for us. As I mentioned, tremendous opportunity to add, 24 million in revenue to our company. It adds new technology and capabilities, a new customer base. They work with massive groups, including Roblox and a lot of publishers around the world. And the reach, 30 million qualified gaming users monthly. This is huge. And these are the type of numbers that we're working with now. And it gives us an opportunity to enter into iGaming, so into gambling. This is really interesting and a tremendous opportunity to enter into that space. And it's an opportunity we'll be looking at and pursuing. The acquisitions won't stop. We're going to continue on the acquisition trail, adding on bolt-ons and pursuing, other platforms that could join to the group. The pipeline stays strong. We're always working to keep that pipeline in the 100+ million range. And we have capital to execute on acquisitions. So we're in a great position to continue that strong acquisition trail. And nothing's changed from the perspective of accretive opportunities and maximizing shareholder value. So we're not going to change what we've done. We're not going to reinvent the wheel. We executed it. It worked. We scaled, and we're going to continue to do that. So we're going to be, as I mentioned, evaluating entering the iGaming space, and we have the partners and the technology to do that with groups like Gameaddik. And we're going to be exploring this very significantly moving into 2022. We think this is a massive growth opportunity for us internally. The Metaverse, the buzzword of the past 6 months. Everybody wants to get into the Metaverse, so much so that Facebook changed their name. But we're going to do it the right way. We're going to work with groups that are legitimately already in the Metaverse, that have a strong understanding of this space. And we're going to position ourselves to support them. And we're going to do it the right way with some of these big groups, as I mentioned, like Epic Games and other publishers. So it's something we're definitely going to pursue. and we've already been evaluating for the past 6 months. That's it from my side. Would love to take on some questions, and hopefully you guys are as excited as I am, because as you can see, we delivered. Jack mentioned it. I said it and we did it.
Okay, Conor, we got a bunch of questions. We're going to get into. Can you hear me?
Yes, sir.
Okay, perfect. Just make sure everything's working. All right, so we got a bunch of audience questions we're going to get into. I do want to say, though, one thing is, I actually was just thinking about this, but, you know, if Wall Street Reporter had an award for like CEO of the Year, which would be based on, you know, performance, shareholder, you know, performance, business performance, not just stock performance, but business performance, you would be hands down the winner of this award. You know, like I think
MTV had those. Make the award. Make the award. Send it to me.
You know what I'm going to do? I'm going to copy the MTV or the
I'll take a photo and everything.
We're gonna say it's gonna be the man. I'm gonna make a copy of like that Man on the Moon award that the MTV used to do. You know, with so this is because the stock did go to the moon. Right now we got to go to Mars. But here's the thing: I need to emphasize for anybody that's watching this who may, because look, we have a lot of new people, so a lot of people may not be familiar with like really like your track record and compared to a lot of other stocks that are out there in different sectors. But so not only did you deliver in terms of the stock went up, 15x plus to the peak, and it's coming back, and it's actually held on. One thing we should add is ESE has actually outperformed most of the video game, iGaming, sports betting, all the stocks that are kind of in that sector. Because if you look at a lot of those charts, whether it's like, I don't know, there's companies we shouldn't mention because I don't want to mention any names, but everybody knows what we're talking about. But you can look at a lot of these charts and they popped and then they're down substantially, whereas ESE has actually held on to a substantial number of the gains, and the stock is above where it was last year at this time. I think last year was, I don't know, 50 cents, 70 cents. We're at $1.40, 50 right now. And also very important, which is very, very important for investors, is you've been very transparent. I mean, you've come onto the program for the last 12 months consistently, whether it was the stock was up, whether it was down, which is not a lot of CEOs do that. There's a lot of companies, especially in Canada, as we know, as anybody who's a Canadian investor knows, when it's a hot theme, whether it's psychedelics or this or that or everybody, all the CEOs are out there talking up the stock. As soon as things go cold, they disappear. They say, "Oh, we don't want to be talking while the market is down," which is complete nonsense. This is exactly what people want to hear what you're doing. And so basically, this kind of separates the men from the boys. We can see the companies that are out there have been consistent through thick and thin, like ESE and some other stocks out there. There were high flyers. All of a sudden, they're all in hibernation once the theme goes cold. But of course, I think the video game sector is going to heat up now.
And look what happens. We're building first a real business. The foundation is set. And guess what? Because we've built that foundation, now when new opportunities like the Metaverse come around, we are positioned better than anyone to execute on that. And we're absolutely not hiding because we're proud of what we do. We're proud of our partnerships. And we have a tremendous business that's growing fast. And we're going to continue to do it. There's no reason to hide if you're delivering time and time again.
By the way, one other thing is on the capital markets side. I didn't even mention that part, but yeah, on the capital markets side, you did a great job. I mean, you raised money when at a good price. I mean, ideally, I would have liked if it would have been at $4, but you can't have everything. Whereas, we've seen some companies, the stock, went up, 50x. And then these guys raised money, last month when it was at the lows, But it's so it's. I mean, all in all, you get the definitely the CEO of the Year award. So let's jump into audience questions. Enough. We don't want to you to get a big head. I don't want you to get a big ego from this. We need you to be humble and execute. We need you to work like a dog to make this stock $15.
I'm already ahead of you. We've already started. We're not stopping.
Okay, so this guy's at JKO asking, will you create your own metaverse world where players can socialize and compete against each other?
No, I don't think that's the opportunity for us to enter into the metaverse. You know, I think we're going to enter into the metaverse with our current partners. You know, they're building out significant platforms, you know, groups like Epic Games, EA Sports, you know, they're all getting into this space, and we're going to provide services for them, and we're going to join forces and enter into that market together. And I think that's the smart way to do it. If new opportunities do arise where we can do a little bit of our own thing in that space, absolutely we'll pursue it. But as you've seen with the company, shareholders come first. Stability, long-term growth is the first priority. So we're going to do things the right way. We're not just going to enter the metaverse to say, oh, we're in the metaverse. No, you're not in the metaverse. We're going to do it the right way. We're actually going to be in the metaverse. And that's the core focus for our group.
I think one of the things I think in other words, the ESC essentially, you're essentially in the infrastructure. You want to stick to the infrastructure side, the server, the kind of the back office side of it, which supports the whole thing. It's sort of like, Amazon. They don't, they're not in, they have Amazon Web Service, the cloud business, which supports a lot of things. The whole Amazon
thing.
Web supports the metaverse.
So that's their number one business, the highest margin business.
Right. Okay. So Steve is asking, are you already seeing an increase in revenue with these new acquisitions? And if so, would that be released in news releases? Say monthly percentage increase, like organic. I don't know if you can do that. That's a little difficult to do, but good question.
Yeah, no, it's a great question. And the reality is, guys, there needs to be patience here. And you have to wait for the quarterly reports, just like everybody else. I'm very confident in those quarterly reports, and they're going to be coming out soon. But you have to wait for them because that's how it works. You know, when you close your acquisition, the revenue only gets put onto the books the day you actually close that acquisition, right? Not when you announce it. So it's important to understand that. So you won't see full reflection of all our acquisitions until realistically, probably Q3 of this year. Which is the opportunity, of course, because obviously the share price does not reflect our revenue because the market metrics on the very low side are 5 to 7 times multiples. On the high side, anywhere from 10 to 15x multiples. So you guys are all smart investors. Do your research and do the math.
Okay, we got some great questions coming in here. So let's go to the next one here. When do you expect annual financials to be out?
We anticipate those to be out in the next 30 days. And, that's all I could say about that. The team's working diligently on it. And we obviously have deadlines, so they will be out approximately in the next 30 days.
Cole is asking, is Kick, which is your esports team, we got to be hearing more about Kick. I love the name, by the way. So is Kick planning to or interested in getting into the CSGO scene?
That's an awesome question, and you're going to laugh, Cole. We literally talked about that this morning with Kick. So absolutely something that we're considering, and CSGO is at the top of the priority. I would say CSGO and Valorant would probably be our two top choices at the moment.
Okay, JKO asks, okay. By the way, okay, great question. We should talk a little bit more about Gameaddik. This is the 25 million revenue. This is the deal you announced, you closed at the end of December, which I think I'm shocked people overlooked at these guys. Massive numbers. We're going to talk about these numbers, and I think it's. We talked about in the last interview. I said, hey, this is a game-changing acquisition because this is like the cornerstone piece in kind of what you're doing, because this business essentially is a
it's the engine,
customer acquisition.
It's the engine. Yeah,
this is the key thing. I mean, okay.
So when we provide our services to groups, let's just use example of some of the top publishers in the world. What's their number one target? To acquire new users. So they're always asking us, can we accelerate user acquisition? Can we accelerate and scale and get more users? Well, guess what? We have 30 million active gaming users per month on this platform. So absolutely, we're going to be doing that. And I want to scale that business to 50, 100 million users a month. And then that's the huge value for all these groups. And, that's how we're going to scale that business. I mean, the opportunity is massive, and the cross section into all our other assets. You need users for digital motorsports. You need users for Kick. You need users for what Frenzy does. You want to bring on more eyeballs, more users. That's how this thing works. So this is going to be that engine in the background, turning and turning. And the numbers speak for themselves. Historical revenues, 24 million, almost 5 million in profit. I mean, are you kidding me? As a standalone business, that's a 250 million market cap as a standalone business based on market metrics, right?
Yeah, based on the comps.
It's just a reality. Look at the comps.
So
when you look at our profile, I mean, you guys should be happy shareholders because this is a discount at the moment, right? I mean, it's just the reality. Look at the metrics on the market. I'm not making up the numbers. Go do the research. Look at the metrics.
Yeah. I think what's really interesting is, which we haven't really talked about, is, look, everybody understands esports, Metaverse, as it's going to develop,
it will develop,
evolve in the next year, 18 months. Yeah. Really, if anybody's a believer in this, which is, multi-billion, massive opportunity, generational opportunity, essentially, ESE Entertainment is kind of a, it's not even just a pure play, but it's sort of as Warren Buffett always loved, the newspaper business, the advertising business, because he called it a gross profit royalty on all business, because every business needs to advertise to get customers, right? So, as business grows, they have to advertise. So essentially, ESE is a gross profit royalty on the esports business and Metaverse, because all those guys need users to make money, to run their business. And this is what your thing, Gameaddik, does. So essentially, it's like, if anybody believes in esports, they need to own ESE. I mean, by the way, this is not a business, but
and the layers of it, they also need the services. Like I said, it's the intersection of gaming, Metaverse, and potentially what else is down the line. We're at the forefront. We've positioned ourselves where we're going to enter into those new markets for real with those groups, because the trend's going into that direction. We're going to go with them because we're already working with them. You grow with the groups that you work with. That's the strategy you see. Why do we work with Porsche? Why do we work with all these massive groups, NASCAR, etc.? Because they're scaling into this sector and we're their partners. So as they scale, we scale. And that's how it works. We announced Valorant. Okay, I'll give you an example. Last year, we did Valorant in one country. This year, we signed a multi-year deal for 20 countries. That's scale. We just went 20x. And we're going to continue to do that with each group. And that's how you scale.
Okay, Gameaddik. I think this goes. Okay, Gameaddik is really huge. I think somebody finally gets it. I think most investors have not figured it out. This guy, I don't know what his name is. I can't read it. It probably, I don't know what it says, but I hope it's nothing dirty. But anyway, this guy gets it. So so is the deal closed? Is it closed?
So it's called a definitive agreement. We've signed the definitive agreement, which means we've come to a final close internally between companies. Now we're just waiting for approval from the TSX, which we anticipate should come in, within the next few weeks. And they put their stamp of approval on it, and then we could officially close. We could then start putting the revenues on our books, and away we go, and we're off to the races. But I think a really great thing would be for me to come on the show with Eric, the CEO of Gameaddik, and he could really get into the details and show you the numbers and show you kind of how things work on his side.
That would be great, because I don't think anybody really understands what this business is. And I think if you get him on and go through like a demo where he can explain how the business works, like talk about some of the customers, just like, why, in other words, look, to generate, 24, 25 million in revenues with, 5 million profits, you got to be
in this sector.
Yeah, you got to be doing something right. So it would be interesting for people to know what he's doing, because again, like you said, that business alone, as a public company, this thing should be 250 million valuation just with that aspect of it. And with everything you do, so right now you got 50 million. I mean, this thing should be 500 million valuation easily, because so how many shares out again fully diluted right now? What's the number?
Approximately 61.7. Approximately.
Okay, so you got, I don't know I can't do the math. Is it like 75, 80 million market cap? Let's call it 80 million market
80
cap.
million, yeah, just approximately, yeah.
You get 80 million market cap just to be conservative. It should be 500 million market cap based on pure valuations. What the multiples are, 10x, 10x revenues. And by the way, 10x. I mean, we've seen multiples go to 20x, 30x.
Oh yeah.
If companies can grow, and in theory, you could have a 50x, because it's aggressive, but you went from 1 million to 50 million in a year. We've seen companies go to crazy multiples. So so basically the thing should be worth 500 million, which is approximately, how do I do the math here? 80 into 500, is that at 7 times, roughly 8, 7, 6 times?
Let's even be conservative. Just do a 5x.
Okay.
Which is the lowest metric on the market. That's the lowest metric on the market.
So basically the stock should be trading 5 times higher than where it is, like right now. Like this, as we're speaking, the stock should be, the fair value would be like 750, literally right now, based on comps. And look, we've seen EGLX. I mean, essentially, if anybody likes EGLX as an esports, whatever deal, ESE is kind of the flip side. I mean, they're very different. Essentially, what they're focused on, kind of the media side, more of like rolling up, I don't know, YouTube channels or whatever it is. You're focused more on the infrastructure side, more like picks and shovels. And I think this is the stuff that's a little bit harder. There's more of a moat around what you're doing than what they're doing, because these YouTube channels or whatever it is, influence, it comes and goes. That's very faddish. Whereas this stuff is here to stay. I mean,
it's exactly what I said. That's why we're doing multi-year deals. So NASCAR is a multi-year deal. Valorant's a multi-year deal. It's exactly what you said. It's stability. We're not going anywhere for 2, 3, 4 years with our partnerships, and we're building and scaling with them. So in year 2 or 3 of the contract, if they want to scale into 50 countries, guess who's getting that contract, right? That's where the scale, the stability, and when you're partnered with not billion, but multi-billion-dollar groups, they want to scale, and they want to scale fast, and they're pushing it. And we're along with them. We're right side by side, shoulder to shoulder, doing the exact same thing. We're pushing and we're growing with them.
We got a bunch of really great questions coming in, so guys, keep them coming. Here we go. Kevin is asking, is ESE exploring any acquisitions in the play to earn NFT space, this is the Metaverse thing. This is where the
of course.
You're playing. Can you explain first, so anybody doesn't know, like, because I barely know what this is, but I kind of a little bit.
I think I'm sure Kevin knows because he's asking the question, but the Metaverse is just basically a virtual world, and the way you earn or buy certain things within that virtual world is using blockchain technology, typically with Ethereum and NFTs, which are backed by Ethereum. So that's kind of how it works. You could go in and buy certain things. You could pay for certain things. But essentially, it's a virtual world. So it's kind of, a lot of people say it's, Web 3.0 or gaming, kind of the next level of gaming. And
I think he's talking about the thing, like, for example, like where
He's talking about Axie-Finity. He's talking about
when you're playing the video game, whatever it is, and you earn, how do you
ice
mine?
casinos and all that kind of stuff.
Are you-
So to Kevin's point, I want to once again give credit to my team. We already entered the NFT space last year, as you guys know, if you followed our news releases. We've sold NFTs, we've made money off of this, so we understand it. We have our own team internally that's working closely with a lot of the big blockchain companies. We realistically will not be creating our own game, play to earn game, but we will definitely be a part of that, right? Whether it's on the user acquisition side or providing services for those groups. So we are 100% aware of it. It's a huge, huge opportunity. That's why we're in it. And we've been in it for the past 6 months. So to your point, Kevin, we're all over this and we follow it very closely.
Okay, so Nicholas is asking, can you comment on the kind of revenues? I guess he's asking like yesterday's news release. Can you just recap exactly the release? And he's asking like what kind of revenues do these deals generate?
Yeah, so those type of deals are service-based deals, but the upside of it is it gives us exclusivity for media rights. So what that does is when you have exclusivity for media rights in a specific country or region, you then have the opportunity to go resell those rights to other groups. You have the opportunity to bring in sponsorship and advertising dollars. So that's the exciting part. It's a big blue sky opportunity. So if I bring in, let's say, a $10 million sponsorship from Coca-Cola, for example, that capital goes to our group to grow that opportunity, to grow that league. So, it's limitless. And if you look at some of the sponsorship and advertising deals that are happening in the space, my gosh, I mean, they've completely transformed. Groups like Intel are putting in $100 million over 10 years. The big crypto platforms are investing hundreds of millions into teams and leagues. So that's the opportunity. That's the big blue sky. But the beautiful thing is because we actually provide a service and value to those groups, we're also getting paid with a really nice margin. So it's a win-win and the upside's huge.
Okay, so we got a comment, an audience comment, and a response actually from the audience, and you can maybe add your thing. So Boris is saying your financial statements don't look encouraging to say the least. Any comments? And Nicholas responded, I think you should say that until 2 quarters from now. It doesn't include their most recent acquisitions. I see a lot of articles only using a last quarter, which doesn't tell the story at all. I would use that yellow highlighter to highlight that.
Guys, I put it in. Read the corporate update, the corporate outlook for 2022, specifically stating this does not include Digital Motorsports, Frenzy, and Gameaddik. Okay? It does not include that. And it's not going to be reflected on the October 31st quarter that's coming out in the next 30 days because they weren't completed during that quarter. So you have to understand how this works. It only gets booked when you close the deal. Then the revenues are then put onto your financial statements. So patience is needed. I would love to share with you guys what I know, but I can't. So you just have to go based on facts. I'm delivering. And quite frankly, if you don't believe the story, then this might not be the deal for you. We want guys that believe in the vision. This is a generational opportunity. I said it from the start. Gaming alone, 200 plus billion. Metaverse, multi-trillion, coming from the top gaming CEO in the world at Epic Games. Do your homework. This is not going away. It's only accelerating, and it's accelerating fast. And you will see it on the financials when they come out and you're patient. But if you wait till the third quarter, I mean, you missed the boat.
Question, has institutional money invested yet? That, in my opinion, will up the price 10x.
Yes, we've started that. We've also started discussing with institutional banks about coverage on the story. Now that they've seen the trajectory and the delivery into 2021, things have changed. They're calling me now, and I'm not calling them. So absolutely, they're going to be involved in 2022. We're going to start getting coverage, and that's absolutely going to help the share price because it's going to give us more coverage and more eyeballs and exposure to more shareholders.
Just to address it, I think this guy's in the U.S., but in Canada, they do buy, shares, a dollar level, whatever. I mean, we have like, I don't know if he's an investor, but like, what is it? Bruce Campbell, the biggest guys on BNN. Yeah, he's buying dollar stocks.
Oh yeah, they all do. Yeah.
So it's only in the U.S. Okay, so this Bubba, we can't have we got to have people who are skeptics. It's important, which is it's valuable. So he's saying lots of good potential as always, but the bottom line is they are not profitable yet. Everything depends on profitability. I would say not for valuations. We've seen plenty of tech stocks that are not profitable that are trading at 10 billion valuation, but
Well, Bubba, Bubba, look at what I said from day one, and it's in every single corporate update I release. The core focus is accretive acquisition and profitability. So I'm on the same page as you. That's the ultimate goal. And if you look at the numbers closely, we've burned less capital than any esports company on the market. We've burned less capital than any gaming company on the market. So that's 100% a focus for us. And we've raised the least and accomplished the most, in my opinion. So Bubba, please do your research and stay on it and continue to ask me that question because it's really important for shareholders. Our focus is profit. At the end of the day, we want to be a profitable company, so we're self-sustaining and we continue to grow.
Yeah, this is actually a very valid point. Thanks for the updates. Market is repricing unprofitable companies no matter revenue growth. When will actual profits? Okay, so I guess you kind of answered this. What are capital needs in the next 6 months and a year? Are you planning to raise capital? I think is what he's asking.
Yeah, so those are internal conversations about growth, right? If we have a very accretive target that we want to pursue and we need to raise a little bit of capital, we're going to do it strategically. We're going to do a round that's an up round from our last one. And we're going to do that with shareholders in mind. Every single raise we've done has been an up round, and we've done it strategically. We've only raised what we needed. We haven't gone for a $20-30 million diluted raise. We're razor tight.
Appreciates that.
Yeah, we're razor tight. We're doing raises of $3 million, $8 million. I mean, we're keeping this thing tight, guys. I mean, once again, actions speak louder than words. There's now, call it a year and a half of data for you guys to look at what I've been doing. And it's consistent, keeping it tight, shareholders in mind, and continue to execute. And nothing's going to change. And if we need to raise money, we're going to sit down and we're going to do the same thing. We're going to evaluate, does this get us closer to profitability? Is this a hyper growth company? Is this an accretive acquisition for us? And then we're going to make that decision. So they're very well thought out, moves that we're making with obviously shareholders in mind and with ultimate goal of profitability in mind.
Yeah, it's again for anybody that's new to the story that hasn't been following it for the last year, it really is. It's really important to know that again, like ESE has not done. You could have done a big financing of 30 million plus back in the summer, and which should have been very dilutive, right? And you didn't. You raised just what you needed at those prices because you think it obviously. You think the stock is going higher. I mean, and we have seen, we've seen companies raise 30 million in certain sectors, psychedelics or whatever it is, and then you never hear from them again. So it's like, so actually, this has been, it's a lot of people talk, but at this point, ESE, you and ESE have developed a track record in the market, which at some point I think is going to be rewarded. That okay. they're actually, when you talk about shareholder value, you actually deliver. You're not doing dilutive financing. There's no, you've actually delivered on growth. So everything is, you've delivered on all fronts here.
Yeah.
So let's see, let's catch up.
And
Question. Go ahead. I'm sorry.
Yeah. Go ahead.
Okay, so the question about a name change, we're talking about potential name change because people were saying like it might improve the stock, and they so people throwing out some. Actually, no, because if you had a name change that was like a sexier name, it might attract people to the stock, right? Like
I said it on the last interview. We've internally already started this process. I was telling for viewers like you're doing right now, send in your potential, opinions and your potential names in, put it in the comments. We'll review them. It's something we're definitely looking at, right? Once again, with shareholders in mind, if this is going to improve the optics to the market, it's going to improve shareholder value, it's going to get us to the next level, you better believe I'm going to do it. I'm doing everything I can under the sun to create stability and growth for this company. And if that's a name change or anything else, we're going to evaluate it. We're going to put time into it, and we're going to think about it. And it's going to be a thoughtful execution. It's not just going to be a name change just because something's hot. We don't believe in that. We believe in building real businesses, a real company, and that's done thoughtfully. It's not done because something's hot. Something hot could be cold in 2 seconds. We want to be here for the next 100 years.
Okay, Samantha's asking, can you talk to potential endorsements, ad rev sponsorships for Frenzy, which is maybe just recap the Frenzy business, what it's about, and then what is the monthly revenue as of December? Have you signed Formula One, like eNASCAR and Nuvei for betting?
So Samantha, you'll see the financials are coming out, as I mentioned, approximately in the next 30 days. So you'll be able to have a closer look at that. And we actually have some really amazing news releases coming out around that question. So I'll just let the news releases speak for themselves, and I'm sure they'll put a smile on your face.
Okay, let's see. Okay, so as a shareholder, I both love the acquisition terms and hate them because dilution is ongoing in the terms. He's concerned that your business may never truly scale. Can you? I mean, it is.
Yeah, that's actually an interesting question. It's actually the polar opposite. What we've done is we've structured some of the best deals, and this isn't coming from me. This is coming from institutions congratulating us on structuring fantastic deals with 3-year earnouts. So what a 3-year earnout means is the actual target doesn't even receive his shares or his full compensation until he delivers for 3 years. And he has to hit certain milestones to even get his shares and to get basically his full value of the acquisition. So really go back and read it carefully. 3-year earnouts. So they have to prove, they have to deliver, and they have to execute. Then they get rewarded. They're not getting rewarded. It's not an upfront deal where they get rewarded and their business can decline. The 3-year earnout's built so that they're growing for 3 years, then they get rewarded. So as I mentioned, it's the polar opposite. They need to deliver and scale, just like we're going to deliver and scale. That's why I positioned those deals the way I did, because I'm delivering, I'm scaling, so you're going to have to do the same. And that's how we've positioned it. So, I 100% disagree with you, and I think you need to read those again.
Question, will there be an acquisition in LA or Singapore? You saw those in the investor deck.
Yeah, I mean, we already work with groups in LA. We already work with the groups in Singapore. If you see the deck, they're highlighted in a different color because those are countries and regions that we're considering. Not that we have an office right now, but we already work with and have some small operations based out of those two different cities and countries. So, always, in mind that LA is a hub, obviously, for gaming. California is a hub, so Singapore is huge, right? A big tech hub. So we'll continue. Yeah, we'll continue to work with them. But what we've done with Gameaddik is we've planted our flag in North America, and it's Montreal, and it's positioned fantastically. It's a tech hub of Canada, right next door to Toronto and New York. Ubisoft, a massive publisher, is based out of there. Who's a partner of ours. That's our hub for North America, and we'll expand from there.
It's smart because they have really crappy weather in the winter, so that everybody's going to be working.
They're
not gonna be
they're in the office.
It's like 20 below zero today or something, so it's like they're going to be working hard. Okay, so a good, actually, a very relevant comment here. Nicholas saying, okay, when you look at the revenues to shares outstanding, miles ahead of other microcaps, 50 million revenues with only 75 million shares after Gameaddik closes. So yeah, again, there's a lot of companies in Canada on the OTC, whatever, they got 300 million shares out, and they're doing like 2 million revenues or whatever it is.
Yeah, and clearly Nicholas has done his homework. It's not hard. Look at the other groups. It's revenue, market cap, and what's the metric? What's the multiple, right? And you guys have to do your math on your own.
Great question here. What are you looking for most in the next 6 months, Conrad?
I like that a lot. What I'm looking for most by far is the big blue sky opportunities that we're going to be pursuing. So I'll break it into two things. Continuing to expand those partnerships with the big publishers, the big gaming publishers. And then second, I can't hide it, exploring the metaverse opportunity and exploring the iGaming opportunity. I mean, those things keep me up at night. They get me excited in the morning. It's just on my mind all the time. So those are the core things that are just, really just have the fire burning inside my belly, man. Those get me super excited.
Connor, we have some, great questions today. So thank you everybody for your questions. It makes my job so much easier. I don't have to think so much. So we have some really great questions. I think actually I haven't seen this level, to be honest, I haven't seen this level of engagement of smart questions in a long time. So I think
but that's great.
Stock is getting traction. I think.
Well, that's great. This is what I want. I want shareholders to challenge me. I want shareholders to be more sophisticated, so that they're on the same page as me, right? They know where I'm coming from. I'm not selling a share. Why? Because I know the metrics on the market, as Nicholas just pointed out, right? These are sophisticated shareholders doing their own homework, saying, wait a minute, as Nicholas said, this should be a 300+ million market cap company today, not tomorrow. So they're doing their homework. I know I'm doing mine. I want these type of shareholders. I want sophisticated shareholders. I want new ones that are eager to learn, just like I am. And I want them to challenge me. Let's go. I'm not hiding from anyone. Jack said it. Whether we're at $1, $4, 25 cents, I'm looking you right in the eye. I'm delivering, and I'm continuing to go on the show. And quite frankly, that's why I think overall, that's why we're outperforming the esports and gaming market on a broad basis.
Yeah, again, also whether the esports sector or the theme is hot or cold, you're on here. It's not like some of the companies in the psychedelic space. Anybody who follows Canadian stocks. When was the last time you saw a psychedelic CEO on a live stream? Not in about 6 months, right? They've all gone. Everybody that raised money, and they've all gone into hibernation, right? So it's like, there you go. And the second.
But you know what, Jack?
Also video games, same thing. Everybody's in hyper.
But that's the opportunity. I started with the opportunity, guys. The metaverse boom is happening right now. The gaming boom is happening right now. In my opinion, those two things are married. And we're in the intersection of both of them. So do you think I'm excited? Are you kidding me? We're booming on every angle. Everybody wants to enter into the space. Everyone's, gamification of everything. It's happening right now. Groups like NASCAR. I mean, we're scaling with NASCAR. If you told someone that 10 years ago, they'd laugh at you, right? This is happening right now. This is a generational opportunity. It's staring you in the face. You have to do your own research, but it's, when it's staring you in the face, typically you're too late.
Let's Conrad, let's kind of recap. So the key things to look forward to in 2022, I think as an investor, let's say, I'd be interested in knowing two things. One is, in the past, I think you said that you're looking at I want to look at two things. One is the growth for acquisitions, because I think that's really the big driver for growth is potential acquisition, pipeline, and closing those things. And of course, the integration and squeezing out synergies and the organic growth. So from the acquisition, looking forward, so the acquisition pipeline, I think in the past you've said that, your goal was really to get to, originally was 100 million, run rate, and we're getting close. We're almost there now. And then I think you said 250 at some point, right? Now, can you get to $250 million run rate? How long do you think it would take to get there? And what kind of pipeline do you have right now, which could potentially lead into that?
I think viewers have to look at the reality of, if you look at historical revenues and you look at track records, if you see growth of a company from 1 million to a potential 50 million run rate or a potential 100 million run rate, is it hard to go from 0 to 50 or 100? Or is it more challenging to do that from 100 to 250, right? We're always pushing ourselves with internal goals, but once you've set a foundation that's that strong, to scale and accelerate the business, in my opinion, from what I've seen internally, it's an easier process. So, you said it, is 250 million revenue a goal? We want to push as hard as we can. I can't say that specific number, but I'm telling you, it's a lot easier to go from 100 to 250 than it is from 0 to 50.
Yeah, so it's the hardest thing is to go from, let's call it 1 million to 10 million. I mean, look, we've seen plenty of micro caps that they say that, hey, we're going to do $1 billion business, but when they say, we never really see them go to that first 10 million. To break 10 million for any business is the most difficult thing. And from there, so at this point, now you're at 50 million. It's much easier to get to 250, because now it's a real business. You're sort of, it's a different. It's no longer in that medium business. You're dealing with institutions. You raise capital easier. You get more deal flow. Everything, it's like a different stratosphere. So
you have a different corporate profile. You're working with bigger groups with bigger budgets. It's just the way it works. You have bigger opportunities because you have more infrastructure. You're scaling into new countries and new regions. As I mentioned previously, you scale from one country to 20 plus countries. These things start happening. They start happening fast, and they start happening in layers, where all of a sudden your other customers say, wait a minute, you did 20 countries for those guys. We need to enter into 50 countries for our company. Can you do that for us? And that's where this massive snowball happens. And the growth potential, I mean, it's just so blatantly obvious.
Yeah, no. So I would say just to recap, I mean, just like in terms of from the investor's perspective, the way I would kind of look at this is, okay, these guys have gone from 1 million to 50 million, and they've delivered on everything. There's potentially, another, let's say 100 million if you can hit 100 million run rate this year, which I think it's pretty likely, because you went from 1 million to 50 million. So to get to 100, let's just say if you get to 100 million in 2022 with a little bit of organic growth, you juice the organic side, you do 1 or 2 acquisitions, you get to 100 million. I think at that point the market would give you that 10x plus valuation. Maybe if that's $1 billion divided by what is it, 80 million, is at $12 a share. Look, here's the great thing also is, from a psychological standpoint, I always believe that stocks can always, if they've done it before, they can always do it again. So it's like, once a stock has a track record to have a certain type of, trajectory, to have a certain type of growth, we see that type of pattern repeating again. So it's a stock that went from 37 cents to 4.50 in 4 months. I could see it easily going back from $1.50 to a 10x, $15, which would that would be fair value if you're doing 100 million run rate.
And the best part is about that, there's going to be new financials coming out that are going to support this, right? The fundamentals are in place. So the metrics and multiples are going to be based on real fundamentals, real numbers when these quarters start coming out. That's the best part of it.
Great question, Jeremy. Okay, I think this guy is from Europe, because I think only the Europeans are into the digital motors, the Formula One. I don't think Americans are into it. Maybe actually in Asia, I think they're also. But okay, so he's asking, have you explored the possibility of going into Formula One or signing one of the drivers with Digital Motorsports? That's your subsidiary, in order to promote the simulators that Digital Motorsports makes and their services.
Absolutely. This is something we've explored. And if you want to see the ambassadors that we already have with Digital Motorsports, go on to digitalmotorsports.com, and there's an ambassador page, and you can see all the ambassadors. We have professional drivers, F3 drivers, professional rally car drivers, everything, right? So just go on. There's a long list. So we work with a lot of ambassadors. Are we going to get more involved with F1 and some ambassadors there? Absolutely. We're always pursuing. That's the cream of the crop, right? So we're always pursuing new ambassadors. You could even put in a comment if what's your favorite driver, and we could pursue them. So we're always open to that, always pushing it.
Yeah. So I think it's interesting is the Formula One is huge everywhere in the world except the US. It's like it's just not, I don't think Americans are into it, but it's you got I don't know, like 1 billion, 2 billion people who follow Formula One, and it's a massive thing everywhere else except the US. Okay. Oh, just a comment. Okay, so Bubba's back. Okay, so I guess he was basically stating his overall concern about long-term success. I think you guys are heading in the correct direction. I believe profitability is what is holding back share price, which is what. Okay, so I think he's basically I think that's he's a shareholder. So I think some people are concerned that I think they're worried that profitability at some point the company, I'm assuming, is going to be profitable. It's a question of when, but I wouldn't say that you need profitability to have a stock go from $1.50 to $15.
No, Amazon was not making money for 70% of its existence, right?
Till like a few years ago, up until a few years ago.
Right? It's what happens in companies with hyper growth companies is, as synergies come into play, as fundamentals are set, and in scale, not only does profitability become big and a reality, but also margin growth. So once we start these integration processes, and once again, it takes time, and we start integrating everything and streamline everything, that's when you're going to start seeing that. And once again, the goal is profitability. Look at the last definitive agreement signed with Gameaddik. It's a highly profitable group. So I'm speaking to you guys through our acquisitions. That's what we're doing, guys. We're focused on profitability, right? These are the groups that we're going after. So we're 100% in line, Bubba. And thanks for being a shareholder. And patience.
Is this the golfer? Is this the famous? Is he the famous golfer? Is this the guy? We don't know. It could be. It could be, right?
That'd be awesome.
Oh, look at this. We got a great. Hang on. So he's mentioning again. This is no one in the U.S. knows it, but okay. Lando Norris, impressive young driver from McLaren with a lot of potential.
Yeah,
there you go.
Absolutely.
Yeah, there's a lot of these guys. It's interesting. There's a lot. Like I think I came across some guy. I never heard of him because I don't. Yeah, the guy's got like 1 million, subscribers on YouTube.
Yeah, it's massive. Yeah, I'm a big fan of his too. Lando Norris is the real deal.
Question. Okay, what are the big 3 reasons why somebody should consider? Oh, this guy stole one of my questions. Okay, I haven't asked that question in a long time actually. Thank you for reminding me. So this is what I usually ask. Yeah, what are the top? I haven't asked this question in months. What are the top 3 reasons today, based on the kind of a great question, based on what you have today, what's going on right now? What are the top 3 reasons why somebody should consider the stock right now?
I'm a broken record. I started with the first slide. Generational opportunity, gaming, 200+ billion opportunity. Metaverse, multi-trillion opportunity size. So it's there. Number 2, execution. We've delivered. Actions speak louder than words. We have a track record now. We've delivered. We're stable. We're growing fast. And finally, share price. So as a shareholder, you want to get into a company at a fair share valuation. And quite frankly, based on the metrics, this is an opportunity for investors to do their research and potentially invest into ESE.
I would just add my 2 cents, and this is not any investment advice or anything, but I would say, look, you have a company that's already developed a tremendous track record through actually a very difficult market, because last year, 2021, was a very rough market for the tech stocks. The disruptive innovation sector was rough, and the number one is the stock has actually outperformed other companies in the space based on 12 months. It went from $1 million to $50 million run rate during this period, and the stock is still trading. Here's the key thing. As like a value investor, is you're basically stealing. You're stealing. This should be illegal to buy the shares right now. It should be illegal to buy the shares, because you're stealing the company here at this 80 million valuation, when it should be trading at 10x 50 million. It should be 500 million. So basically, you got a 5x from here is just on the current thing. Not even talking about 100 million, which could be next year, and that would be $1 billion. So you have a real path to go to $6, $7, $15 in the next 3 to 6 months, because the market is forward looking. I think the market, once they see a couple more of these deals close, they're not going to be able to ignore it. I think they're just not going to be able to ignore this. At some point.
And we can't speculate on share price. We can't give advice. What I encourage everyone to do is go do your research. This is public knowledge. The metrics are public knowledge. The multiples are public knowledge. I keep going back to it, but Nicholas, one of the shareholders who asked the question, he did his research. And he's looking at it going, wait a minute, other groups are trading at 300 million plus market cap with less value. So I encourage everyone to do their own research because I think they're going to come back very impressed with what we've accomplished.
Okay, on that note, Conrad, I want to thank you, but most importantly, I want to thank everybody in the audience for the great questions today. We got some real engagement coming in for the stock right now, some really well-informed questions. Some challenging questions. No softballs. Conrad, we don't filter these things. I give you the, as it comes, we put them up here. It's the transparency. I'd like to emphasize. You've been very transparent with investors from day one. You answer all the tough questions, and you've been through this, market up or down. You're back. So hopefully next time you're on, the stock will be trading at fair value, which is, $5-7 plus. On that note, thank you again. We'll see you everybody on the next live stream.
And Jack, don't forget to send me my trophy. It should be next to me on the next interview.
I got to get to work on that. We might have to give you one of the mugs that we sell, the penny stock billionaire.
No, I want the trophy. You said it. I'm gonna come collect.
I do have to. Okay, now we got to make a trophy. Okay, all right. Thank you, everybody, again.
See you guys later.